CMHC is easing its mortgage insurance rules, and it admits that it made a mistake. Joining me to talk about all of this is Clinton Wilkins, who is our mortgage guru, of course, mortgage broker. Clinton, thanks for doing this today. I appreciate your time.
Thanks for having me, Todd.
You got it. So for those who don't know what CMHC is, give everybody a quick overview first, please.
It's the Canadian Mortgage and Housing Corporation, and it's a Crown Corp. There are three mortgage insurers in Canada. CMHC is the government body, and then there's two private corporations as well. And they all essentially do the same thing. They provide different programs, but primarily the main focus is default insurance, which is required for banks to get on a borrower's behalf anytime that they buy a home and they put down less than 20%. And during the pandemic, CMHC changed their policies to make it more challenging for borrowers to qualify with them, but the other two insurers didn't follow suit. So essentially, CMHC made a conscious decision to make it more challenging for applicants that would require their type of insurance, or their insurance per se, and basically they said that they were wrong, and they've reverted now back to their pre-pandemic underwriting policies.
All right, so what's changed to what they accept for credit score, debt ratio? What are the changes?
It's actually both. So they've actually reduced their minimum beacon score requirement back to 600, and during this last change, they'd actually increased it to 680. And now they're allowing extended ratios as well. So that means that qualifiers that, borrowers that have better credit scores can have extended ratios. And during the last year or so, anyone that, maybe had credit that wasn't as great but still could qualify for high ratio mortgage insurance, or maybe, was more indebted or was borrowing to the, they're really to their max, they were only able to get insurance from the two private corporations. The challenge is, and this is what's really important for our listeners here, and really residents of Nova Scotia and across Atlantic Canada, CMHC insures the most rural properties. So essentially, these changes had disadvantaged those who were looking to buy a home in more rural areas of Canada. So I think it's great news for Canadians. I think that, CMHC saying that, they were wrong is, a big, pill for them to swallow. But I'm glad that now there is parity and alignment with all three insurers. It really balances the playing field for consumers.
They lost some market share, from what I understand, to some of these to the other insurers. I'm sure that was part of the motivation here, right?
That's 100%. Yeah, and I think they were looking to reduce their market share. At one time, CMHC had about 90% market share. So basically, the government was the primary backer of these high-ratio mortgages. And, that's obviously changed over time. They've removed some programs where the other two insurers still run, which is great. I mean, I think competition is really, really important. But, the federal government really is in business for homeownership, and I think it's just so important. This is what we talk about, Todd, during our show. It's really about these dreams of homeownership, and when they made these changes, they were basically unfairly disadvantaging those who potentially could get insurance with them. And also basically, it prevented some people in rural Canada from getting approved.
Do you anticipate at some point other entrants to this sphere? Because I think you mentioned there's two others besides CMHC, or how many are there?
Yeah.
And do you see that growing?
There's three insurers.
Yeah.
So there's the Canadian Mortgage and Housing Corporation, which is the Crown Corp, and then there's Sagen and Canada Guarantee, which are both private corporations. I don't know if there's going to be other players in the marketplace. At the end of the day, they're still all governed by the federal government, by the Department of Finance. So, are there going to be other players that come into the Canadian market? It's hard to say. Our market in Canada is small compared to, obviously, the market in the U.S. At one time, there was some ownership, like American ownership in these insurers, but now they're essentially Canadian. And, will there be other insurers that come into Canada? I'm not sure. the market's only so big, but I do believe that having three insurers is important because maybe there's a file that will work with the Canadian Mortgage and Housing Corporation that wouldn't work with Sagen or Canada Guarantee. Or maybe there's a file that will work with Sagen but not Canada Guarantee. I think having that variety and also options is just so important. We never want to be in a business where there's a monopoly. And, I'm glad to see that the federal government is coming back in line with the other two insurers.
But this is a Crown Corporation. Are there any concerns ultimately to taxpayers when it comes to exposure with CMHC and risk? Any thoughts on that or any comment?
Well, CMHC financially actually does very, very well. Their primary, goal is not necessarily default insurance. They run a bunch of different programs from Indigenous housing to low-income housing to a bunch of different programs that they actually run, including like Green Home and Eco housing. So, the CMHC has actually done transfer credits back to the federal government because they are so profitable. And, I think their risk tolerance, obviously, over the last couple of years has been lower, but I think the federal government may be in a position where they can take more risk than the private insurers. It is the government. They have, they print the money. So I don't know. I don't have the clear answer in terms of, the risk. I think overall there were concerns around the market being inflated, and that's why they've changed some of the underwriting policies. But, just thinking back even a short few weeks ago, they changed the qualifying rate to make it more challenging for all borrowers to qualify. They're always tweaking the policies. And I've been doing this for 15 years, and, we've done almost $1 billion worth of mortgage financing here in Halifax. And the pendulum swings from one, end to the other. And I think we're now coming maybe more back in a neutral kind of environment. I remember when borrowers, if they had a heartbeat, we were able to get them a mortgage. And I would say even today, it's some of the most rigorous that I've seen in 15 years, but borrowers are still getting approved every day. It's miraculous. I remember when there was 100% financing, and when that went away, we thought, okay, now the market's going to be dead, and no first-time homebuyers are going to be able to qualify. But guess what? They figure it out. And more gifts from family are being involved, and we're seeing large gifts from family. I think in some cases, mother, father, brother, sister, or even mortgaging their own homes to provide gifts to first-time home buyers to get into the market. And, we get questions every day, Todd, about pricing, because obviously the market is hot. There's certainly a lot of transactions going on, but I think it's kind of the new normal. I think our real estate in Halifax, at least, was undervalued for some time, and now I think we've come more in line with a city of this size. And, I think there's still a lot of opportunities for homeowners to purchase in Nova Scotia. You might not be buying on the peninsula, but maybe you can buy, outside of the city or outside of HRM. There's still options for, home buyers to become, get into the market. So.
Right. And this is something that you and I can chat about on Mortgage 101, which is, you mentioned, tee up the show, I guess, is what I'm suggesting.
We're going to be on this weekend. We're going to be on this weekend, and we're going to be talking, obviously, it's the summer, so we're going to be talking about cottages, and, there's a lot of conversation around refinances right now, which I know when we're talking about purchasing and the market being hot, you don't really talk about refinance, but we're getting a lot of questions around refinancing. Is it a good time? Specifically about the mortgage rates, but also refinances are just so tied to the property values, and where the values are up, it's really creating some opportunities for existing homeowners. So I think it's going to be a really good show. We're going to be on Saturday and Sunday here on News 95.7. So we'd love for you to tune in. And if there's anything you want us to talk about during the show, feel free to send me an email or Todd an email or send us a tweet, and we'd love to chat about whatever you are curious about on our show.
Absolutely. 11 till 12 on Saturday and noon till 1 on Sunday. Clinton, I look forward to chatting later in the week, recording the show with you, and we'll have some cool tunes as well. Thanks so much, Clinton.